Now, we just heard before the break that the ECB isn't planning to change their interest rates. As expected, of course, monetary policy remains the same. But I'm wondering, is this what potentially is driving investors back to cryptocurrencies and Bitcoin?
Yeah, I mean, the decision of the ECB is for sure one thing to look at. I think we should look over like the ocean to the US, where you basically had last year price in 4 hikes going down to 2, now it's 0. And even the chance that we're going to have 0 rates or negative rates at all. And at the same time, you have like basically inflation. Not inflation in electricity and meat and food, but you have it in education, you have it in real estate prices, you have it in asset prices, everywhere else. So people, I think, are looking for some kind of inflation protection.
And they're finding it in cryptocurrencies, are they?
Yes, they find it again and start to look at it again, especially after the last year, 2018, which was like a bad year. Cryptos went off the mainstream, but behind the curtain, there was a lot of work done. I mean, the regulator cleaned up the ICO mess. Most shitcoins are getting away with it. We get more clarity regarding regulation. We have more and more institutional players coming in. And also like the price surge last week of Bitcoin also
What was your reaction? What was your reaction to that price surge last week?
I mean, I woke up and got a nice print screenshot from CoinMarketCap. Everything like what was up, and I was thinking it's an April Fool's. And it stayed on, and the price is still up over 5,200. And now different theories and reason why that happened or what the catalysts were are suddenly emerging.
I mean, we talked about the catalyst there, but what do you think is giving Bitcoin, for example, its stability right now? Why is it staying up? I
mean, I think that people start to understanding the technology better. So, and then additionally, you have more guidance from the regulatory. So you have more people going into that space. At the same time, you had less ICOs. You have much more serious players entering. You had Fidelity launching their trading and custody stuff. Because for institutional, the biggest risk is always, how do I securely store my cryptos?
And I mean, have you noticed that the kind of investor that's coming to you is changing?
Yes, I mean, the investor, we always were focusing on professional investors. So we had banks, family offices, clients, so forth. I mean, on the other side, on the consulting side, we now got approached by like a bank in Switzerland to do like a corporation, basically on the education side, helping them to establish a proper offering for crypto assets, because they also realize that technology is here to stay, as we also have seen with JP Morgan, with their own dollar or stable coin they're basically launching. We have a cooperation with Hypothekarbank Lenzburg, which is a very technology-affine stuff. So it just needs time. At the end of the day, it's still technology, and it needs to merge.
Okay, but you are seeing that it is developing because you're seeing more and more interest from banks and things. I mean, what does bank interest in crypto and blockchain do for your industry?
I think the banks have two angles to look at it. On one side, it's basically the blockchain technology itself allows them to replace a lot of back office and middle office inefficiency. On the front side, they basically have a product which still provides high margin, while all the traditional banking products have basically a fee raised to 0. We see it with ETFs being free. I mean, there are some ETFs that actually have a negative fee, so basically you get paid to invest.
Okay, we'll talk about ETFs in just a second, but does it give crypto a legitimacy when you see people like banks and institutional investors coming on board?
I mean, yes, it obviously has like a signaling to the other people. If they're going to do it perfectly or not, time will tell. But at the end of the day, the bank is still where the money is, and they have a lot of trust in the publicity or in the public. And basically, when they start to look at that, it's like Gütesiegel. It's like a stamp of proof.
I mean, you talk about institutional investors coming on board, banks showing their interest. We talked about yield a few moments ago. Is that why they're coming? Is it yield? Is it because there's improved regulation? Is it because there are better products? You mentioned ETFs.
I mean, at the end of the day, you have to ask yourself why you invest. I mean, you invest to generate a future return or a hopefully expected return. And basically, crypto assets are still like uncorrelated to everything else. And if you look basically at the cross-asset correlation of all established asset classes, it's so high. There's basically no way to hide. And the cryptos, especially Bitcoin, offers like an alternative to diversify the portfolio, basically providing you additional return per given unit of risk.
But is there more interest now because you can offer crypto ETFs, for example?
I mean, it's not an ETF, it's exchange-traded notes, which still have some kind of counterparty. But let's put it that way, there are more and more instruments coming up that make it very easy, basically, to go to your online bank and buy crypto exposure with an ISIN and Valor. So, yes.
And that's developing in Europe, but less so in the United States. So there's some way to go, isn't there, in developing products and...
Yes, it's going in this way. I mean, basically, an ETF is the biggest retail product. And most financial market authority, they have one goal if it comes to security law. It's basically reducing the information asymmetry between issuer and investors, basically making sure that all the necessary information are there. And the SEC, they declined several ETFs application basically because they say the underlying market structure is not yet mature enough. Okay. So their goal is to protect the end consumer or the investor in this case. And with Fidelity and more established players coming in, I think the SEC will become much more confident actually dealing with this entity that have balance sheet and know what they're doing, basically.
But how do the SEC do that? Is it through more regulation? Is that the future?
I mean, no, I just think that the asset class itself and the underlying infrastructure will mature over time. And if I mean, there was like an interesting research report submitted to the SEC, basically showing, yes, 95% of the volume is fake volume. But you can take out 10 exchanges which are highly professionally run. They have basically a spread from Bitcoin of 1 cent. So that's much more, the spread is tighter than on any other financial instrument. So it's basically, we just need time.
How much time?
It's hard to say. I think we're going to see, during the next year, end of this year, we're going to see the first ETFs. Okay. Not ETC or ETN, really ETF.
The real deal.
Yeah.
And when we talk about the end of this year and when we talk about Bitcoin price, I can't let you go without asking you where you think the price is going to go from here. Up or down?
Yeah, at least it's the direction. I would say it's up.
How far up?
I would not say we're going to see 20,000 again until end of year, but it's going to be up.
Okay. You seem very confident.
Yes.
Okay.